Okay, this is Lloyd Princeton with Design Management Company, and I am very happy to welcome everybody to today's call. The purpose of today's call is actually to discuss the ever and immediate changing landscape of lending, and before we dive into that, because we're going to have a really great advisor on the phone who I actually had the pleasure of listening to yesterday. I want to share, I think, a little kind of upside of our time at home and things that we can do right now. As many of you may know, I'm an avid reader of the Wall Street Journal, and one of my favorite columnists is Andy Kessler, and he recently wrote an opinion piece called "Innovate from Your Couch." Actually, before I proceed, I'm going to mute people right now just because I can hear some background noise. Okay, that's much better. Anyway, so Andy wrote a piece, Innovate from Your Couch, and I'm paraphrasing parts of it, but he goes, by now you may have read about how Isaac Newton, while sheltering in place during the 1665 closure of the University of Cambridge for the bubonic plague, used his free time to discover gravity and invent calculus, and how during the closing of London theaters due to the plague in 1606, William Shakespeare had nothing better to do and wrote King Lear and Macbeth. Those guys didn't even have Wi-Fi. You do, plus extra time, so be productive. And then he jumps over and says in 2007, Travis Kalanick, I guess, having just sold a company, was between assignments, as they call joblessness in Silicon Valley. And sitting around and bored with his friend Garrett Camp, they brainstormed cool business ideas. Let's go buy 10 Mercedes S-Classes. Let's go hire 20 drivers. Let's get parking garages, and let's make it so us and the 100 friends could push a button and an S-Class would roll up for only us. Mr. Kalanick told me, this wasn't about building a huge company. This was about us and our 100 friends being baller in SF. Nonetheless, Uber was born. So with that, with those little inspiring thoughts, and while many of us have more time at home now, we can certainly make it very productive time. And I know I myself am finding a lot of time for introspection and a lot of good reading. I'm not going through the entire Netflix catalog. So with that bit of advice from a business coach, one of the things that will help us feel more productive is to have less anxiety. One of the things that will cause less anxiety is to have cash in the bank, and whether or not it's earned or borrowed, being there and being able to pay important bills will make our lives much less stressful. And I think this is unfortunately one of those things where unless you do have a lot of cash reserves, you're just going to need to buck up and accept the fact that borrowed money with a really low cost of funds is a prudent and totally acceptable way to manage our businesses into the future until we know what's going to happen. So without further ado, I'm going to turn the floor over to my colleague, Brent Celestin, who is with Full Court Advisors. And Brent and his colleague, Charlie, yesterday gave a really good presentation on behalf of the Decorative Furnishings Association, of which I'm a member. And he's going to talk about the immediate landscape of the SBA world, and I can just tell you from my own experience, it is changing by the minute. I turned in my applications this morning for what you'll learn is the PPP, and about 20 minutes ago I got an email from Brent saying that the SBA had just updated their application. So he sent me a new one but said, don't fill it out yet. So, things are moving. So, Brent, over to you.
Thank you, Lloyd, and good morning or good afternoon, everybody. Before I start, I have you folks on speakerphone. Is the quality of the sound okay, or would it be better if I take it off speaker and just talk directly into the phone?
Brent, I hear you just great, so I'm just going to assume we're good. And by the way, if anyone is currently muted and you have a problem, just hit *6 and it will unmute you. So otherwise, Brent, please proceed.
Okay. Again, thank you, everyone. Just a little bit of background about myself and my partner. My name is Brent Celestin. I have been working with my firm, Full Court Advisors, for the past 13 years, raising debt financing, providing turnaround consulting services to middle market, family-owned and privately held companies across the U.S. My partner, Charlie Snyder, is a principal with Upland Business Capital in Morristown, New Jersey, and he's been providing restructuring and turnaround consulting services to the same clientele from the East Coast with an emphasis on SBA loans. Charlie has packaged on average $30 million of loans over the last 5 years and is a Gold Circle advisor that works regularly with the SBA. Charlie and I have been tracking the EIDL program, which I will get into in a second, but now the PPP program for the last 2 weeks, and the fact that we don't have brain damage at this point to us is quite astonishing. This program has changed on a daily basis from the moment it came out of the Senate, going through the House, getting to the President, and then since last week it has changed at least 5 times and changed again last night. So as Lloyd was saying, and I'm working with Lloyd on his application, we had documents set to him, and we, as of this morning, are having to send the new SBA application out. That's how fluid the situation is. And given that, what I share with you today is I think you have to qualify it as working knowledge. We think we have 99% of this understood, but every morning you wake up, there's something new coming out of the SBA, and we're seeing final documentation as to guidance, but we've seen that before. So what I'm telling you today is facts that we have as of today that I have to say may be subject to being updated at a later date. And what I can suggest is that I can communicate with Lloyd on any updates that he can then share with you as we get as the days roll forward, so that you can take a prize as well. Having spent 2 weeks tracking this, you'd think we'd be subject matter experts, but I can honestly tell you, if you had the time to get up to speed this morning on everything, most of the stuff you'd learned before would no longer be relevant. So you're getting the benefit of this update, if you will, this late in the process, which means most of this information should be fine. So let me get started. So the SBA loan programs, I'm going to talk about the highlights. There are actually 2. I'm going to talk about the PPP program first, and then I will talk about the EIDL program next. So through the bill that was signed by the President into law, the bailout for the small businesses, there is the bill that was signed into law is called the CARES Act. And in the CARES Act, there is a provision for the small business relief called the Paycheck Protection Program. We use the acronym PPP, okay? The PPP program is designed to provide businesses with funds to pay payroll for 8 weeks after the receipt of the loan proceeds. And then to provide some additional loan proceeds to be used for associated payroll costs, for rents, for utilities, for mortgages, and for debt service. The loan is equal to 2.5 times. The way the loan is calculated is that the loan is equal to 2.5 times your average monthly payroll costs from 2019. So if you looked at your W-3, which is the control sheet that goes with your W-2s, it will show you how much you paid for your payrolls last year as reported to the IRS. That, with the sum of your health insurance premiums paid through a group policy, plus any state and local wage taxes paid on wages, The sum of all those times divided by 12 times 2.5 is the amount of the loan that you can apply for. And so that's a new development. As of last night, it was only wages. Now it includes health insurance and the state wage taxes. Excuse me one second. The loans are 100% guaranteed by the federal government, and they have to be sourced through a SBA preferred lender. Small businesses are those that have 500 or fewer employees. The loans may be are basically available to anyone during the COVID-19 crisis to help restore the payrolls. And essentially, the monies being used for the payrolls for the next 8 weeks will be forgiven on June 30th. So the monies that are borrowed for payroll and used for that purpose, and I'll get to this in a bit, will be forgiven. So in my read of this is that the government did not want to see the unemployment offices overrun, so they decided to run unemployment benefits for employees through employers and through this program. To the extent that you are using your loans for the payroll, again, those will be forgiven. If the portion of the total loan for payroll exceeds 75%, the entire amount will be forgiven as of the end of June. The amount that's not forgiven there will be a 6-month waiting period before payments are made, but those payments, the loan will then need to be repaid over 18 months. So when you get the loan, you have 6 months of no payments, and then you will have 18 months of payments, and that outstanding portion needs to be paid back. The cost of funds have changed since yesterday. It's gone from 0.5% interest rate to 1%. So it's still a bargain. And the advisory here is that whatever you borrow, just make sure you're comfortable with the portion that will not be forgiven, that you're going to be able to pay that back starting in 6 months and over the next year and a half. What's included, again, so payroll, health insurance, the income taxes, those are all qualified payroll expenses. What is not included? Independent contractors. They are not going to be included in this program for the borrower, and they're not a qualified expense as it pertains to the forgiveness provisions of this program. There is no personal guarantee required. There is no collateral required. And what makes this, obviously the biggest feature about this program is that the forgiveness provisions are only in this program. They're not in the next one, which I'm going to go into. The second loan that we're going to discuss is actually the first one that everyone probably became aware of. It was called the EIDL, or the Emergency Injury Disaster Loan. And that has many of the same provisions in terms of how the loan is calculated, last year's payroll costs, and it is for the purposes of paying payroll, fixed debts, and accounts payable going forward. It's repayable up to 30 years at 3.75 to 4%, but there is no loan forgiveness option. And there's a personal guarantee involved, and the documentation is far more exhaustive, and the application needs to be processed directly through the SBA web portal, which was crashing all last week. I'm going to anticipate some questions here and say there's going to be a question of, well, can you apply for both? Can you take a grant? There's a grant provision in the EIDL loan. What if I have that, or should I take it? And the answers all roll up to you can apply for both and get benefits from both. If you have any monies coming from the EIDL program, they'll need to be either paid off or added on, paid off from the PPP program. So we don't see an advantage to going through the EIDL loan program, but I think the one program that's got the most benefit would be the PPP program. In terms of the application process, the SBA has put out a form as of this morning. It's a 2484. You can Google search it if you like, and I would suggest you go to SBA, type in SBA form 2484, and that is the latest application released sometime in the middle of last night. On that application, it's going to ask for company information. It's going to ask for the payroll costs for last year. This is where you want to get your Excel out and see you get your wages plus your health insurance plus any state income tax, state payroll taxes paid, and that is the sum of what you're going to put in use to build the loan amount on the form. I will state that there is a qualifier on wages paid. There are several, but the one that's probably most important is the reported wages for last year cannot include pay to any individual beyond $100,000 in the calculation. So if for instance, you have one employee and it's yourself and it's and you paid yourself $120,000 last year, only $100,000 is eligible for this program. And so I suggest that if there are multiple employees that are paid higher than $100,000, that you schedule those, and those get deducted from the sum of your payroll, your health insurance, and the state taxes. They're also requiring that we provide the last 4 quarters, 2019 quarterly 941 returns, which substantiate the dollar amounts that you're putting on the application. For those of you who are not familiar with what that form is, when you work through ADP or Paychex or whoever's providing your payroll on a quarterly basis, the IRS asks for a 941, which is a summary of all the wages paid and the taxes paid, and reflecting that what, if any, balance is still due. The sum of those 4 will add up to what your total wages are reported during the year. It happens that there is a form that you submit with your W-2s. It's called a W-3 that has a summary of all that information. So if you're having trouble pulling the 941s together, we are confirming that they will accept the W-3 instead of the 941s as a suitable replacement. They also want to see proof of wages paid year-to-date through February 29, and we are advising clients that if they go to a payroll register with the period end at or around February 29, and those registers include year-to-date wages paid, that last payroll register be used to meet this requirement. If the payroll register does not include year-to-date information, then we ask that you provide the payroll registers since January 1 through February 29. A few other things that are required. One is 2019 year-end financial income statement for the business. This does not need to be CPA prepared. It can be internal and it can be a draft, but they're using that just to see that the company has had some revenues. It's an operating entity, and it's not a borrower who's submitting a fraudulent application here. And they'd like to see year-to-date financial income statement, I should say, through the end of February as well. So the keys to securing the PPP loan. The key is that, to start off with, is that when the loan is submitted, the package is submitted, it needs to be complete and it needs to be accurate. As you can only fathom, these SBA lenders are going to be inundated like they have never seen with loan applications. And if there are any imperfections and I'm going to use that word, and I hardly ever do in this line of business, but if there's any imperfections in the application, it's going to be set aside. And once you're out of the queue, you sort of got to get back into the queue relative to where the next lender would come in. So getting it set correctly is critical to getting it processed without it being kicked out. We also suggest that whoever's preparing this for you or doing the work in your company is that they go through and they verify the information ties out. What we're saying here is a double check that the numbers make sense relative to the backup, so that it doesn't again get kicked back by the lender. In our instance, we work with 6 preferred lenders. I would encourage you to work with an SBA preferred lender. That's what they do. They have the authority to approve these loans without forwarding them on to the to the SBA, and they have credit decision authority. So it goes no further. They handle it in-house, and your best bet is to work with smaller SBA preferred lenders than larger. If what we have is access to the credit underwriters, so we can talk an underwriter through an application before it gets rejected. Larger preferred SBA lenders are not going to be able to provide you with that degree of access, but in your own local markets, oftentimes it is the community banks that are the preferred lenders, and you can go online and Google SBA preferred lenders for your area. There's a number of hits you'll see, and you can sort of surf through them to find one that is going to be a regional at most. If you're going to be working with a Wells or a Bank of America, there's going to be no face to the application, and you're not going to be able to know where things are standing in terms of the process or how long it's going to take.
Excuse me, Brent.
Yeah.
Brent, I want to just chime in for a moment because you've been giving a lot of great information to these people, but I also think I want to let everybody know there is a PowerPoint on this which will be made available, and so rather than have people eyes glazed over and taking zillions of notes, I'd really love to, even unless you have like a quick salient point, let's open it up to a few questions because this is all foreign territory, and I think giving them a chance to ask questions right about now might not be a bad idea.
Yeah, that's fine. I will
okay.
pretty much do it, so go ahead and...
So that being said, if anyone does have questions, we will make the PowerPoint available, and I also, just before we take questions, I wanted to share my own personal experience. I did apply for the EIDL loan, and Brent is correct in that they do ask for more documentation, but most businesses will have it available, and it's essentially 3 years of tax returns, personal and business, as well as 3 months of bank statements and your driver's license. So it wasn't that egregious, but to the point of the system crashing, he was correct. So if you're going to do it, jump online and do it early. I haven't heard anything from them since my application. I am also utilizing Brent's services, and I want to qualify that they are paid services. This is not an endorsement, and these are certainly things that you can do on your own or through other people. So with that being said, anybody who's interested in asking a question, please push *6 on your phone. That will unmute you, and Brent will take questions.
Can you talk a little bit about sole proprietors?
Yes. Guidance received this morning is that a program is being rolled out for sole proprietors in the next 7 to 10 days. And that's about all I can tell you. I've read that many sole proprietors do not run their compensation through a payroll service. So the SBA is looking at using income statements from last year and year-to-date this year to sort of substantiate the amount that you're asking for. But again, if that changes as much as this program has changed in a similar timeline, there's no saying what it's going to end up being. And the same thing goes for 1090. Sole proprietors, whether they're single LLC, they're just an unincorporated individual. This conversation applies also for folks who call themselves independent contractors. So I can't even imagine what it's going to be like in 7 to 10 days, but we will keep apprised of that, and when we finally get the guidelines, I will forward them to Lloyd.
And I have a question for you, since I'm looking at the and thank you for the question, Joanne. I'm looking at the application. Clarification: there's a distinction between 100,000 plus, annual compensation for employees. So when the question asks, "What's the average monthly payroll?" am I correct that you would add up the payrolls of anyone under, annual payroll for anyone under 100,000, and then for anyone over 100, you're just putting in 100 and then dividing that number by 12 to get your average monthly? Is that a correct understanding?
Yes.
Okay.
And another way of doing it is taking the 941s and subtracting the excess compensation paid to those individuals.
Okay. Got it. And now, as of early this morning, we're able to add in health insurance paid in 2019 as well as the state payroll taxes, and then divide that by 12 as well.
Yes. Group health insurance, yes.
Okay, group health insurance. I mean, if it was just, does it have to be a group plan, or can it just be? What if you had only, you're only paying? If it was an individual out there,
I believe that if you're only paying for yourself, then that would apply.
Okay.
If you've got 3 policies but 20 employees, that would be where that type of scenario we would need to get some further guidance on. But I don't think that it's intended for group insurance unless you don't have additional employees, and I believe it's intended that your premiums paid would qualify as well.
Thank you. Other questions?
I have a question. Hi, Lloyd. Stacy Lappick.
Hello.
Hello. So I am my only employee. I have an S-Corp. I'm my only employee, and I pay myself at the end of the year just enough to cover basically payroll taxes and insurance premiums. So when I figure out my payroll expense, can I take my W-2 and then add the net profits, which is mostly what I live on? Or, how would that work?
So there really is no provision as of this time with this program to add in the foregone income you didn't take through the W-2. But I believe with the self-employment and the 1099 contract, I think if you would be better served to wait until the next program is rolled out for the sole proprietors or the individuals who don't have other employees, because that program, I understand, will be based on net income, and if your wages are there, that would be added to your net income.
Oh, okay, and I'd be eligible even though I have a corporation.
Yes.
Great.
And I think, Brent, you would, I think, if I'm not mistaken, your advice might be also that if you are not urgently in need of cash this very second, waiting a few days while things get solidified and the immediate crush is over probably wouldn't be the worst thing in the world.
I can tell you we have packaged one business's loan about 5 times in the last week. So, yeah, I would wait. I would wait till the day before and then come up for air and say, what is this now? Because we're not going to recognize, or they're not going to disclose it and roll it out like they've done this. I pray.
Right. Do you have a date when the sole proprietorship process will be?
Guidance is saying 7 to 10 days.
From today?
Yes.
Okay. Thank you so much.
Yeah, and I should just give you one qualifier. If your W-2 adds up to $100,000, then that's the most you're going to be able to apply for in any scenario as your annual wage. So if that is the case, then I would go ahead and get started now. I wouldn't wait for that.
Oh, gotcha.
Because if it's you're reporting income of $150,000, well, 50 is going to be ineligible. So you only get so much credit for your wages paid to yourself per employee, and that's $100,000.
Okay, and I heard something about paying partial. You could include rent or interest on mortgage and things like that. Is that included in that?
Yeah, so that's part of the forgiveness provision. If you take out, let's just say, a $20,000 loan, if $15,001 is spent on wages in the next 8 weeks, then the entire loan is forgiven on June 30th. If you take out $14,900, then the $14,900 is forgiven, and the rest is going to be that amount that will have to be repaid. But you can use the proceeds from the loan for forgiveness of mortgage and the interest and the health insurance and the utility.
Okay. Great. Thank you so much. Do I hit *6 to mute myself again?
You could, or just don't say anything.
Yeah, right.
Other questions? You're welcome. No? Going once, going twice. Any other questions from the audience?
Hi, Lloyd. Yes, it's Martin Hughes in New York.
I have one.
Hi. Tell me, for the EIDL program, it still covers office rent, office expenses, correct?
Yes.
Okay.
Hi, Lloyd.
I want to clarify. Thank you. Yes, you'll be next, and we have another gentleman also. Just to clarify too, and Brent, maybe you could read. I don't know if between the EIDL and the PPP, potential loan amounts will be different, and I don't know if you can be approved for one or declined for another. The only and I'd like you to answer that, but I know that one distinction between the two at the moment is two distinctions. One is interest rate, the EIDL being, 3.75, and you have to pay it back. And the PPP is 1%, although, a very large portion of it may very well be forgiven.
And you can add that there are no personal guarantees with the PPP program, but when we were processing our EIDL application last week, it was still part of the package. And to your point earlier, Lloyd, I have not heard back from the SBA either on our submission of over a week ago for the EIDL program.
Got it. Mr. Hughes, I hope that answered your question. There was another gentleman who was about to ask a question. Are you still there?
I'm here. Hey, Lloyd. Randall with Pavarini.
Hey. Okay, Randall.
Independent contractors, how are you? Good to hear from you. Thank you. So independent contractors, I have somebody who I hire and pay for his services. He's not on paychecks. He's not included. Is that right?
That's correct. And that's a definitive guidance that was issued last night from the SBA. And I will forward a copy of that to Lloyd after the call.
Thank you so much.
So just a question.
Question? Sorry.
What's that?
I'm not sure if somebody else was asking a question or if I can ask a question.
Go for it.
Okay. Similar to the lady who asked earlier who draws most of her income at the end of the year, I do likewise, but I do also have several staff. So I'm not sure which direction I should go. Wait for the sole proprietor application. Does that also cover staff payroll?
So you have kind of a unique situation, and I would suggest that we would need to get into particulars to have a better idea of which way you should go. So that's probably something I would have to take offline.
Okay. All righty.
Okay.
And I'm assuming is that Sally?
It is, yes.
Okay, Sally, I will connect you and Brent promptly offline.
Thank you so much.
You're welcome. Other questions?
Brent, I thought that this initial application, at least this is what I was told and what I thought I read, was for sole proprietors. So now that has changed?
No, it's never been for sole proprietors. They haven't released the sole proprietor program. So there's been so much misinformation circulated, and you've probably been inundated with updates and guidances, and to the extent they're correct, they're only as correct until the next, but we've seen so much misinformation, it's astonishing.
Mm-hmm. And what about 1099 employees? You know,
you're really not supposed to use those two words in one sentence because they're technically not employees. They're maybe workers, and you may have your bookkeeper, who you're paying as an outside contractor. But for the definitions here and for this program, 1099 workers are not considered employees.
Okay.
So you don't get the benefit of including them in the calculations or for forgiveness purposes.
That doesn't mean you can't borrow money to pay them and keep things moving along. It just means that that money will need to be repaid.
Yeah, well, it's correct. You are not prohibited from using these funds for. I mean, you have great discretion on how to use the funds, but when it comes to loan forgiveness, certain expenses are going to be included, and some are not going to be qualified. And you can pay your bookkeeper in this scenario, but you're not going to be able to get forgiveness on that portion paid.
Okay.
And I think it's also, I mean, if I may, and this is purely me being subjective and opinionated, but this is the time where we need to really, dig in and be, I hate to say, but optimistic. And, we do need to, if you as the business owner, have done well up until this very point, then why don't you just assume you are going to do well at some point before long and help the other people who have less than we do. And if that means paying your subcontractors and getting out there and patronizing the restaurants the minute they open, we need to do it. Because if everybody retrenches and stops spending, we're going to be hosed as an economy, as a society, and we really, really will suffer. So, the U.S. government has given us a lifeline here to try to ease the pain of it. But I can tell you, for my own business, I've just accepted the fact that I'm just going to need to borrow money, and I'm going to have debt, and it's going to take me a couple of years to pay that off. Unless a miracle happens. So, that being said, other questions, please.
So, Linnea Schwieters here. I'm a sole proprietor, and I already completed the EIDL application. So, I guess I don't know because my understanding it was for sole proprietors as well. That's the information that I got. So is that application even valid? Do I need to go in and add more information to it, or do I just let it go?
Did you provide any wage reporting, W-2 information or 941 information with it?
No.
So here's what I've been speaking of primarily is to the PPP program. Nobody has heard back from the EIDL folks. We all were of the understanding that it was restricted to payroll wages. So I don't know how your application is going to come back. But my fear is, in the document I just forwarded to Lloyd, it clearly states that the program will be rolled out in 7 to 10 days for independent contractors and sole proprietors. So I don't know how that's going to turn out for you.
Okay.
And I'm in the same boat as you, by the way.
Do you know when we're going to hear back on an application, like how many days it takes?
I don't. It's through the SBA portal. They're not working through the preferred lenders. And I can only speak from personal experience. We submitted an application a week ago last Sunday. We still haven't heard back from the SBA.
Okay.
My recommendation to you is, because I'm in the same boat as you, is, I applied for the IDL, 8 days ago. It's there. I'm going to let it process, and in the meantime, I'm doing my PP application with Brent, and so you are allowed to apply for both. So you're not doing anything wrong in doubling up.
Yeah, and if it so happens that you have an EIDL program, it comes through and you take funds from it, those funds are going to be factored in and carved out of the PPP program. But if any amount gets added to the PPP program, it does not have the forgiveness provisions in it. The forgiveness provisions do not apply to the EIDL monies you borrowed.
Oh, see, that I was also confused about that. The information that I received said that it was going to be forgiven based on an 8-week period.
I haven't seen that.
Oh wait, is that that's the PPP, right?
Mm-hmm. Yes.
Right.
It's all confusing.
Let's not confuse everybody. So other questions that are different.
I have one.
Okay.
Okay. I just wanted to actually confirm that. Well, one is what the other lady was asking. Her bookkeeper, for instance, the independent contractor, her bookkeeper can actually file for this if she's her own LLC or something. Correct? At a later date.
At a later date, right. Now, if I work on an engagement basis with my clients, they will pay me. That will come to me as a 1099 income, which is reported. How I take pay out of my LLC or what have you really determines which program I can apply to. If I'm taking wages and I have a W-2, then I can apply, and I'm satisfied with the wages and the health insurance adds up to the right number. I can't apply to this program because I have that W-2. But if I don't, then you just need to wait that 7 to 10 days until the program comes out for folks who take income that is not paid through a paycheck.
Right, 1099 folks, correct?
Yep.
Okay.
Yep.
Okay. And then my second question is, I'm not sure if you're going to put this on. You said you were going to kind of summarize. Is that correct?
Yeah. I'm going to forward a PowerPoint presentation. I've already forwarded to Lloyd the document that's been distributed as of last night as to the whys and wherefores of the program.
Okay, because I think a real key component here, as I've been working on the PPP, but I just want to make sure, like you've said, make sure you have it right, double check your numbers. What I want to be sure of is I take the quarterly 941 reports for 2019, add those up, divide it by 12, and that gives me my average, or I can use the W3, divide that by 12, and that's my average.
Yeah, but let's just say that number is 200. Let's just say it's $1 million, and you've got an employee that has an extra $50,000 of compensation beyond the 100 eligible. You would subtract the excess amount from the total wages.
Right. I don't
before
have
continuing
with
that,
the math. Okay, so if you don't have anyone like that, that's what you do.
Right, and then add your health insurance premiums, and then add any state taxes paid on the payroll, and that's your starting point for doing the math.
Okay, so that's the part I wasn't sure, the state taxes you have to add back in.
You get credit for those.
Okay.
And then we have time for one quick final question, if it's a different question than what we've had.
Lloyd, hi, it's Martin. One more time. Brent, you only deal with West Coast. You said Charlie deals with East Coast. Is that correct?
Well, yes, but I should say he's on the East Coast working with folks in his market. I'm out here on the West Coast. We will be working through a queue of applications. So I'll be working on East Coast, and he'll be working on West Coast. But we have, we're bringing our resources together. So our lenders are agnostic as to where the applicants are located. So if you're in California or New Mexico, we will process your applications through lenders that may be on the eastern seaboard or in the Ohio. So they don't care where you're located, and it's not going to be a hindrance to you as to where we would process your application.
Who, if we would like for you to actually handle this, since this seems to be far more complicated than I really want to dive into, would we contact you or would we contact Charlie since we're in New York?
You can you can contact either of us. And if I were you, I suppose I'd be more comfortable contacting the local office. So contacting Charlie would be in order. Our contact information is at the end of the slideshow. So you'll have access to Charlie's phone number and his email address.
Okay.
And Martin,
great.
I'll see that you get the information as well. I'm going to close with just this one thought. I don't want to. It's not a discussion point. I just want to bring it up as a point of reference because through another resource, through the SCORE system, which is Retired Business People, they also turned me on to the CDC, which is the Certified Development Company, which is a small business finance, and it's a nonprofit, which has also created a fund to help small businesses, and it's outside of the SBA. I only mention this because the CDC loan has an emergency relief fund. I did put in an application for it. It gives loans up to $150,000, different interest rates. The only thing I will mention about them is they were lickety-split in responding. I mean, from the time I put my super simple interface online application, which, by the way, was all the tax returns, 3 years of personal, 3 corporate, and 3 months of bank statements, plus my driver's license, I had a response within 2 hours, and there was a live human being I could speak with. So that is being processed. I don't know what the interest rate is going to be, but I only mention that because and I will keep people. I'm happy to share my experiences if it comes back and it's favorable and it's affordable and all the above. It could be relevant for somebody who might be in a rush or under a cash crunch for their resources. And that, once again, is the Certified Development Company. And if you go to cdcloans.com /emergency relief, you'll find that information too. So there are resources out there, and I think I know we're all going to pull through this. If you have an immediate needs and you want be in touch with anybody or have anything, please just shoot me an email and I'll make the introductions. That being said, I am very grateful to Brent for his time and his expertise, and I hope everyone has a beautiful Friday, a great weekend, and make sure you take time to be good to yourselves, and don't worry about the things we can't control. So I bid you all adieu, and